The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil CHapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil CHapman.
Hi folks, Basil CHapman, Tiger Technicians Hour. My pleasure to be here. Whoops, Monday through Friday market days, and 11 o'clock till 12, of course, Tiger Technicians Hour, as you heard, 877-927-6648. Love to hear from you. Let's just run this. This is Monday, first day of the week. Let's just run these numbers as I'm looking at them. The E-minis right now, leg E just above the up channel, the inside track resistance area. Technical, really good, 96% in the 96% in the stochastic. MACD is still good. Weekly chart, leg D. If I use phantom peak, I don't want to get into that right now, but the 120-minute chart gave a beautiful peak E, and it went from 1924.25 in the E-mini June contract this morning. Actually, it was Friday. No, it was this morning, last night into this morning with a double top, and then plummeted down to 1914. I say plummeted, it's only 10 points, but boy, there hasn't been a 10-point move like this to the downside for a while. So yes, it plummets down to 1924.25. Right now, it's back at 1919. Wait a minute, whoa, something's wrong there. Plummets down to 1913.75, and right now it's at 1919.50, halfway. So this is what I'm looking at here. Let's go to our chart. This is what I show my subscribers every day. I don't always show them the 120-minute chart on the Dow in the Dow diamonds in this great detail, but there was a peak D at 166.60. It pulls back, makes an oval pattern. Had this typed in. I'll have to do it again. Leg, body, B-O-D-Y, B-O-D-Y. This is the neck, and then we expect the head. And then the beak, and that should pull back. So basically what we're looking at is that the diamonds went to 167.28, missed by 2 pennies, making a leg, not leg D, making a new all-time high. But wait a minute. Is that a big deal? Well, let me explain a couple of things here as I'm going through this to get to it in some detail. In the Dow itself, the Dow went to an all-time high. What were we expecting? What were my subscribers expecting today? We were expecting that somehow or other, today, maybe tomorrow, we thought it would be today, the 16,736 plus area would be hit. What was the high so far today? I say so far, the day's not even an hour, and it's just over an hour and a half into the session. So what I'm looking at here, it's the Dow squeaked 6 points high. It went to 16,740 at an all-time high. Right now, the Dow is at plus 9. It was down minus 28. It was up 20-something. And where did it go? So, yeah, and the S&P is down $1.50. This is just the most fascinating period we've had in quite some time. Let me show you why. In this particular pattern, I've got an F/B in the daily chart. The stochastic's at 88% in the Dow daily. The MACD is still positive. Not great, but it is positive. The 9-day moving average of 16,645 is going to be really important. It hasn't broken down below that since it broke out above it on May the 21st when it went 16,526. Now, this is going to be really important. In the context of what we're looking at here, I have no idea what could create some kind of market exacerbation to the downside. There's no bad news right now. There's no real great news, but it's okay news. And you need bad news to be able to really keep this market down if it's going to turn around. In the 120-minute chart, I've got an F/C and in the Dow, but the VIX index actually popped up this morning, opened at 6.9, and it went to 12.17. Right now it's 11.90, still up 50 cents. So this is a very mixed market. I had I had an indication on Friday with the Chapman Wave trend gauge that there was a real good chance that the E-minis would have a 7 to 9 point rally that would instigate the cash indices, both the S&P and the others, and that there should be some kind of upside spike in the morning. Well, if you look at the S&P, look what happened. The E-minis last night went down to, so that's the second, we want the first, had a low last night of somewhere in the 1920 area, and the high today is 1924. So that's only 4 points. So that internal positive reaction that we're looking at from the Chapman Wave trend gauge is still in force. So the day's young, we're going to see what happens. This is just, I tell you, this is going to be a really interesting day. Let me show you why. Because the comp index, let's go to the Qs if you don't mind. The QQQ series made a PT in the 120-minute chart. It's AD. Now, if you remember, we were long the 300% ETF of the QQQ series. We went long the 21st at the opening, 21st of May, and it spiraled out. It gave us almost a 10% gain. We took our profits on Friday, and that's leg D with a doji candle and a 2-bar reversal so far today. As I say, the day's not even 2 hours into it, and I can't talk about the close. I'm just saying, as of now, unless the Qs go above 91.45, so far there's a little bit of a top. But the stochastics at 96% and the MACD is still good. So it's going to be something that happens, and we'll talk about that as we go down the list. You'll see exactly what I'm talking about. Now we're going to go to gold, the GCM14. The GLD right now is down 52 cents at 119.91. The gold contract is trying to find some kind of a base. Let me show you the chart pattern that I'm looking at here. I showed this, not this one, I showed the GLD, I believe it was, for my subscribers. I must apologize to my subscribers. I had about 12 or 13 charts starting off on Saturday. I've got a new thing now that as I do the charts, in any case, I do them. I thought, why do I have to wait until Monday? I'm just going to send them out as I do them over the weekend, and people can peruse them so that by the time it comes to Monday, they're already ahead of the game. Now look at the left side, right side price time match going to Friday's date, the last day of May. There was a left side, right side price time match from the lows that were established back in January, around about the 1238.80 area, but I'm going to the candle of January 23rd. That's where it bumps up again. That's where I take the plumb line to get the left side, right side price time match. Well, it's gone there exactly, and today went to a slightly lower low. Yep, 41.80. Today's low is 40.90. So what we're looking at here is in the pattern that we're looking at, it almost looks like an inverted staple, and a flat stochastic. A flat stochastic to me is just not a good sign at all, especially when the MACD is still expanding. So the best I can see is that maybe there's a bounce in gold, maybe from 12, let's call it 1260, to be safe. Let me see. Yeah, from this level, there could be a bounce, maybe to 1258, 1265. 1265 is the 9-period exponential moving average. But if it closes decisively under 1233, it's very negative in the next 2 days. So gold, I just don't see anything in gold right now. The weekly pattern has got the H pattern. They went to an M, lowercase m. The monthly chart is the same thing, H pattern to a lowercase m. Continuous pattern. 120-minute chart is attempting to find some kind of support. Nothing there. Silver is, at this particular point, let me find out what silver is doing. Silver is up 0.05 at 18.47. Gold is down 30 cents at 12.4570. High-grade copper is at 3.167. High copper is just kind of stuck here, which is stuck is fine as long as it doesn't break down. I'd prefer to see it push over the 3.22 area. That would be very positive. In fact, if it does that, it extends leg C in the weekly chart. So far, copper's holding well. Let's put it that way. And you've got bonds. Now, this is the way I want you to spend a little time. Look, bonds have made a peak D in the TLT. In the USM contract, it is E PE, and holding okay, but the MACD is turning down, making a whole bunch of these little arch formations, testing the 9-period, that red line, the 9-period moving average support. Sorry, the MACD's slow moving average support, and the stochastic still at 82%. A wide beta so far in the green line turning down, but that red line's flattening out, and that's the most important thing. So bonds to me are saying this is a very critical period. Now, what I'd say to subscribers is, why is it critical? Because if bonds are about to start another move to the upside, and now I have to go to the there we go. I have to go to my continuous contract. The 9-period moving average at 135.5, beautiful, lovely support, hasn't gotten even close to it. 136 and 30 seconds right now says, okay, so then that means you got to watch it, because there's one little moving average that says, hey, we're just becoming a little bit overbought. But the MACD is at 86%. Sorry, the MACD is strong, and the stochastic's at 86%, and the on-balance volume is one of those indicators that is warning to be a little bit careful here of bonds. Now, if I put this together and I say, wait a minute, if the stock market takes a sharp dip right now, and all we were looking for was a new recovery, a modest recovery high, we got that by 5 or 6 points today in the Dow, not the diamonds. The diamonds, someone asked me if I'd explain, is it possible to turn down without the diamonds making another high? I'll talk about that in a moment. Other than to say that if bonds were to start a brand new move to the upside because money flows out of stocks into bonds, that would say that the target of 142 to 143.5, or let's call it 144, becomes an active projection. But these very quick peaks, A, B, C, D, says that you should get some kind of a pullback. This is a week that's really important on a weekly basis where we are. If bonds break under 134, I'm going to have to say, hey, timeout. We've had a pretty decent move. Now there's a timeout which might become deeper, but we go one step at a time. And if bonds were to break into the 139 off 140 area, that would be very positive on Friday, Friday's close on the weekly chart. So that's what I wanted to talk about. And I just want to quickly say EUR USD, very strong move, but it hasn't taken, not a very strong move, I'm sorry, I didn't mean to say it. Very strong move down below the 200-period moving average, but hugging that moving average of 1.36. So that says until we really decisively move either upward into the 1.37 or below into the out of the 135 area, it's kind of stuck in a range. But look at the USD JPY. Leg B, a powerful leg B in the daily. Monthly, the weekly is attempting to turn around. So this is going to be something to watch. It really is important. And if you look at the dollar should be breaking out because of the gold weakness. But in fact, what we've got is the dollar is in an alternate count here, F/B, holding that 200-period moving average, just like the dollar struggling at the 200-period moving average, just like the euro dollar is the same with the dollar. I'll be back with our callers straight after this break. Hold tight.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil CHapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back. Basil CHapman, Tiger Traditions Hour, and we're going to go to our first caller patiently waiting there. Hi, Nahid, how are you? Back in Safety Harbor, Florida.
Yes, thank you. I'm doing fine. How are you doing?
Good. Well, thank you.
Could you please look at Tesla?
Okay. Now, Tesla, for a little while now, I've been kind of negative on Tesla. It made a monthly chart, and this is the big thing about it. It's got a G/C. Everything about it says that it's probably a G, that there isn't enough strength right now to get back to the old high of 265 round number high. I'd love to look at those round numbers. So let's just put that aside and say it's a brand new month. Last month's candle is a kind of an indecisive candle, but it did hold the test the 9-period moving average in the month and then bounce right back towards the highs. The MACD, the whole thing about it is that the MACD's green line, that what I call the fast moving average, is holding well. It's flattening out. It is turning down, but still holding pretty darn well. The stochastic is very weak. The on-balance volume is weak. The relative strength is weak. The weekly chart, for now I have a choice. I'm calling it peak E, and I'm going to change that because everything about it says that was an E. Right arm extension in the week chart to the 265 round number high. It absolutely looks like a news influenced, not an internal, but it's really a residual sign of strength, because the stochastic went up and then fell under 80% very quickly, and the MACD, the fast moving average, went up and then plopped. came down. So there's no real internal strength here. So I'm looking at this and I'm thinking this is going to be another H pattern. So my bias on the monthly is a negative bias. My bias on the weekly is a negative bias. And now we get to the daily. Oh, and just let me just say I'm wrong. If Tesla spikes above 214.80, and right now it's at 203.52, 214, we're 11 points, 5%. Should be nothing for this stock when it gets going, as you know, either up or down. Very, very quick, very sharp moves. Now we get to the daily. The daily is the one that I spent some time on last week, and now I can change this line a little bit, just a little bit here. Okay. So as far as I'm concerned, today's action makes us a peak C if there's no new high above the 214.80 area, and I can't see any reason why today there should be a move like that from where we are right now at 203.53 down 424. The MACD is okay. It's certainly, when the price was at this level almost every other time on the way up, the MACD was doing very nicely. Now the MACD is doing okay. Histogram's okay, but the slow stochastic is at 85%, and we won't know until maybe tomorrow or the next day, by Wednesday, whether it's flattening out, which would be a positive, and say, yep, it could still go to D above that level, the 214 level I was talking about, call it 215. But if it doesn't do that, it looks to me like the big test is going to be this trend line that I've just drawn in now. I'm just going to put it there, and that would say any move this week in Tesla below 198, and it's in real trouble. No, so my bias on the weekly is negative. My bias on the monthly is negative. The daily says I don't have enough evidence yet because we don't even know if this is going to peak C. Everything about it says it should, but it's held above the 9-period moving average for every single session since the 19th of May. So I have to see whether it closes above today. If it closes above 205.60, oh, where is it at? 205.60? No, it needs to close above. Wait, that doesn't make sense. 205. Yeah, it has to. It's at 203.72. It has to close above 205.60 today to say, okay, now we must still expect a leg D. So I just want to grab the 120-minute chart, and then I'm going to ask you what you're doing. So I've got a peak D in the 120-minute chart, and it's pulled back where? Right on the 200-period exponential moving average support. It was resistance, then it became support, then it went nicely above it. Now it's back, almost touching it again, and that level is at 203.04. I have to tell you this on a very short-term basis. If Tesla breaks above 205.90 to 206.20, that's today or early tomorrow, without taking out today's low, then there's a good chance that it's going to push and try to tackle that 210 to 214 area. But as it stands right now, this is not very good action. So now I'm going to ask you, Nahid, what are you doing?
I was planning to buy a put, so I'm not in it.
Okay, that makes it. That's the thinking. That perfect thinking, at least for what I'm looking at. We've got a break coming up, and now I can tell you the levels where I would start to implement the plan. We'll be right back with Nahid looking at Tesla as a potential short vehicle. So I'll be back. Dow's up 27, S&P's up $1.19.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Sudden burst of energy. The Dow is down 26. S&P's up 55 cents. And we've got the composite index down 9. And this is why I mentioned before, a fascinating period, because we are going to find out within days whether or not I called it a counter trend rally in the momentum stocks, and especially in the IBB, that's the NASDAQ biotech stocks, whether they've started a new, I don't know if I can call it a bull move, but a substantial rally, or whether this is almost the end of their energy for the rebound, because the tide in the monthly has changed dramatically to down. So it's very important with Nahid calling us about Tesla. This fits exactly the category. And unbelievable. One of the prime stocks on the upside. All of a sudden, it's stalled. It's still at 204, which is a little bit higher than the 116.10 most recent significant low of this year, I believe. Yep. So what we're looking at here is, where would the ideal place be to institute some kind of put position in Tesla or to go short? The way I'm looking at it, the most significant area of resistance for at least a couple of months has been this whole area between the Roman candle body close of the 24th of March, which is 220, and on the downside of that particular section of candles, we're looking at the high of the 24th of 212.80. So that takes you towards that leg C, continuation, or a peak C with a leg D to come, just above 214.80. So here's what I'm looking at, Nahid.
Yes.
If the market today, even though it's bounced back in certain areas, closes down, and I don't mean just closes down 6 points on the Dow, 30 cents on the S&P. I mean, if it closes towards the lows of the day, I suspect that we are in the process of making some kind of a top that's going to be tested, short-term top, that's going to be tested Tuesday, Wednesday, maybe even into Thursday, by two things. One is we haven't yet got any bad news. And number two is that the volatility index is still at 11.76. It's still under 12. And until the VIX index can go into the 12.80s, 13.20s, there's going to be residual buying, especially since this is the first day of a new month and money has come in and that money has to be put to use. And I suspect that Tesla is one of those stocks that's going to give us tremendous amount of clues about the sexy stocks, not about the overall market, but just about the stocks like a Tesla, like a Priceline, like a Google or an Apple. And if I'm looking at Tesla right now, I would start to implement, you could do it here at 204, but 10 points, even looking out maybe 2 months, 10 points on a $200 and something stock is still a premium that you're going to be giving up. I'd prefer if you could get it a little higher up and start implementing, at least thinking of the plan, around about 208 to 210.
Okay.
That's not the full position. That's just like your first. That would be great if you get that opportunity to do it. Now, what if this is it? The high of Friday at 214.80 is the high for now, at least for this period. You don't get a chance because all of a sudden, by the end of the day, it's down at 201, 200. Well, that's either the risk that you're going to take, or you say to yourself, you know what? Because there have been lower highs and lower lows in Tesla, as there have been in many of them big momentum stocks, until it proves that it's making higher highs and higher lows, I'm prepared to start a position right now of a put position at 204, 205, somewhere in this area.
Right.
Because even if it goes higher on the way down, it's supposed to take out the 204. It's supposed to go below 198. That's what we're really looking at. So you'll be early, but you'd be in. So that's just one way. Someone say, okay, Terry in the Den says 28% short interest in Tesla. I want to speak to that issue right now. In my opening call, we've had some success in shorting stocks that have very high short interest. And what happens is everything happens like normal. The stock should still keep going down. Everything about what you're doing says, I've identified correctly that this is a weak stock and it should be going down. Now, where does the 28 or 32 or even higher percentage of short interest come in? On the rebounds.
I see. Okay.
That's the reason why I'm saying only implement. Think of starting a position now. It's preferable to get it on one of those inflection, those bounces to the upside, which tend to then fail as more shorts come in. So if I'm correct that Tesla looks to me like it needs to come down sharply. Oh, I need to talk to one other issue. The reason why I think it needs to come down is the chart pattern in the weekly. I don't know if you can see my charts right now, but you've got your own charts, so you know exactly what I'm looking at. I've got this as an E rather than a B at the top of the round number 265. The narrow channel to the downside, if it takes a lot of time, when the price eventually breaks out, it just wipes out a whole bunch of the bars on the left side. I've got a feeling it needs at least a couple more lower lows before it even gets to that spike to the upside. So if I'm wrong, and that's really what I want you to speak to the issue right now, because of this channel formation, because the MACD, in fact, this is the opening salvo of the week, so it's hard to even talk about the week as if it's finished. This just barely begun. The MACD is so far kind of flat, even though it's negative. in the weekly chart. So I'm saying to you that I would implement a put position somewhere around this area. And I would probably try again to add another one in the 212 to maybe the 214. But if Tesla goes to 216, that's 12 points higher. It's about 8% higher, which theoretically on a short position, you should be prepared that stocks can pop up 8%. Right. If it gets there, it might have made the U-turn to start moving higher.
Okay.
You see what I'm saying? And that would mean 218.66, the high of the week of the 9th, will become a target. So right. I'm saying to you, this is the next 3-4 days is really important for Tesla and for many of these momentum stocks. Look at Apple. Apple is not the same thing. Apple's now gone to all-time high. To recovery highs, and it's holding, and it's in leg E, possibly peak E in that pattern that I call the stalk leg formation. And that says that Apple, with a stochastic of 89% and the MACD still good, could go a little higher, but it's starting to become quite a bit toppy. And it might have just a little more room to the upside, but if Apple breaks, it'll be the same with Tesla. If Apple breaks closes under 621, it's at 630 right now, it's in for at least a short-term correction, if not a deeper correction. The same thing with Tesla. So they're all in the same position, these momentum stocks. And I'm going to suggest to you that you nibble on the put position here. You have another one, and then you have to. And then I would add on the rollover to the downside, not on any more, not above 212 would I add to it. I'd have to wait. Okay.
Well, that was a great analysis. Thank you so much. I really appreciate this.
Well, thank you very much for calling. And stock I did quite a bit of work on during the weekend, and it's got a peak F in the daily and in the 120-minute chart, which is the reason why I'm saying to you, at least start the position here, because if it starts to roll over and you see Tesla take out 623, the low of the 28th, I would even add another put position.
Sounds great. Thank you so much. Have a wonderful week.
You too. Thanks for calling and giving me a chance to look a little more closely at. But that was Apple I was talking about. Sorry. Let me just say it one more time. Okay. It was Tesla. If Tesla made a peak D in the 120-minute chart, I meant to say that if it takes out today's low of 201.67, I would add another put position. That's what I was thinking.
Fantastic. Thank you very much.
Thank you very much for calling. So, folks, let me do a couple of other things here. Look, you've got the IYT. Now, I don't know if I can do this right now. I wanted to show you what I was looking at and why I sent so many charts out. A question then, would I look at the XLF? Yes, I will. The IYT is in leg E. That's the iShares Dow Jones Transportation Average in industrial fund. And I waited for the leg D, and we've just got leg D in the 120-minute chart. We've got a leg E in the daily. We've got a leg D in the weekly, and as of now, I don't have the weekly technicals are just starting to strengthen. I don't want to be, how can I put this? I don't want to be in the position where it looks like I'm telling the market what to do. I can only go at this particular point. We've got no bad news. The VIX hasn't broken down. In fact, it's running a little bit, but it's still in a very low area. It's in the buying area. And what's happening is it's a very steady move up in the IYT, the transportation index. So it says to me, something has to happen in the daily chart. Bonds have to start making new recovery highs rather than making this a short-term top at 115.19 in the TLT. You've got to start seeing the VIX, the volatility index. You've got to have this action. This is actually a leg B right now, but it's the tiniest little peak A to B. It's not even, I can't even talk about arch formation. It's more like a flat rectangle formation. You've got to see these things happen, and I love the fact that the Dow has done exactly what we wanted from our opening call to subscribers. Let me just show you something here. Wow, am I going to be able to pick this up? Here we go. So there it is. Okay. So let me just show you a couple of things here. Oh, I will be doing Larry's show today. Larry's traveling, and I was asked if I could do it, and I've just quickly made a little time so that I have that time free, because I'll have to finish before the 1 o'clock hour. I'll be finishing at about 10 minutes to 1 Eastern time, but I will do 3/4 of Larry's show. Look, here's the E-mini and the discussion from our opening call subscribers. This is what we were looking at, and I explained exactly why and what is important. And it gave near-term resistance in the 1925s, and support is the 1919 to 1970 area. So let's look at exactly what happened. E-minis, ESM 14, went the high so far 1923 or 24, 1924, 25. I said 1925, so we'll see if that's the case. Now I said 1919 to 1917, the low so far is 1913. It actually undercut it. So there's going to be a very important session. Was that a correction that we've just had? So from our opening call subscribers, we have short positions and we have a long position. We only have one long position. So far it's doing okay. And so that was that particular chart. Have a look at this chart here. Let me lift this up so that I can actually see it. Here is a chart of the, right here. This is what? This is the Dow Diamonds. That was, there's that leg D, there's the leg, the body, the neck. There's the oval pattern. I was expecting a test of 166.93. Let's see where it is. So this is the detailed stuff that I do for my subscribers every single day. It's very important for me to be able to articulate as clearly as I can what we're looking at. And there it is. There's the oval pattern. I expected that the 160, I wrote it incorrectly, it should be 167.29, level 167.29, 167.29, should be tested and pierced by a couple of cents. So for 167.31, it's 2 cents higher. So we're going to watch this real closely, what happens the rest of the day. So that was another chart. Let's go to, right there. I have no idea what the next one is. Next one is this one here. Oh, this is what I drew. I discussed this recently. I said, I'm going to draw this pattern. This was back in May the 19th, I think it was. I said, this is what I'm expecting. I'm expecting us to go to a leg D in the Dow Diamond Daily. Then I expect us to pull back. And then I expect a new recovery high. And then possibly we could see the sharpest move to the downside. So what are we looking at? We're looking at right here. Right here, Dow Diamonds. Am I going to be able to find it? I will find it. It's right here. DIA Daily, right there. Here's the chart. Whoa, I squashed it over there. No, that's not the one. Can't be the one. Give me a second. I'll find it in the cell. Okay. Dow Diamond, there it is. Dow Diamonds Daily. Is this the one? No, this is not the one either. Wait a minute. What's going on here? Dow Diamonds. We'll find it. Oh, it was at the bottom. There it is. Dow Diamonds Daily. That's the chart. Where is it? No, it's not. Oh, I hate this. Have I looked at this one? Let's just check it out. There it is. So here it is. There's the pattern. That gray line that I drew, and it went to D at 167.29. Then it pulled back like we were looking for, and it went down to 163.04. Then I drew in this line. I changed it to green, but it's the same line right up there, and I expected a new recovery high for the V-shaped topping formation, and that's where we are. Now what? I'll be back straight after this break, and then I'll be also doing Larry's show, so I'm on for a little while, and I'm here for an hour.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil CHapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil CHapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil CHapman, Tiger Ignitions Hour. Dollars up, 22 S&Ps up $1.50. This is the first day of June, June the 2nd. Hope everyone had a great weekend. Wow, what beautiful weather we had. Oh, just splendiferous. And we're going to go straight to Mark in Denver. We're looking at the IYR. Was I doing something beforehand that I've just forgotten about? During the break, I do about 7 or 8 charts. I'm already in a different planet here. Hi, Mark. How are you?
Good. How are you, Basil?
I'm well, thank you.
Good. So I went short the IYR via the DRV when it tested its prior low this morning at the high 38, 39 range there, or the 38. It was 38.90-ish. And
so
I'm
you're
wondering,
using what are you using to short the IYR?
The 3 times short the IYR, I think, is DRV.
DRV.
Dr. V.
Dr. V. I typed it somewhere. I can't see where it is. Oh, there. I typed it on the chart.
Okay.
It shouldn't be on the chart. DRV. Okay. So this is the Direction Daily RL Real Estate. So this is a real estate bear 3 times. So you're short the IYR. Now, let me just ask you a couple of things. Number one, is this the position or is this like a starter position?
You know, I was a little nervous about doing it because the IYR actually tested the prior high from May 13th on Friday, and it had pretty decent volume. It had 9 million in the 13th and 11 million on Friday. It did test the high, test that number and close below it. Today it looks like the volume's quite a bit lower. It's tested both Friday and the 13th again today, and it's slightly lower. So give me your thoughts. I've got a bunch of things going on here. When I say things, I need to, I just wanted to see if I've completed. Yeah, okay. I just wanted to see that I completed everything I needed to complete, and I'll tell you what I'm looking at. The IYR, which is the iShares US Real Estate ETF, it's really commercial real estate. It has the SGPs, the SPGs, that is, Simon Properties, etc., companies like that. The technique that I call about deflecting, the deflection of the fast-moving average, I call it the fast-moving average, that's the 9-period differential of the MACD, that green line, if it deflects decisively away from the red line, once it's in a negative situation, which it is right now, and the stochastic has not gone back to 80%, that's when, if I draw a vertical line here from the peak D high in the IYR, the daily chart from 71.73, which was on the 13th of May, to today's high of the 2nd of June at 71.85, which is only 12 cents higher, the MACD and stochastic have a completely different to them. They are saying, we're struggling, but if the price moves up, they will turn positive. So that's why if the price moves down, you're looking at a double hit because they are not going to give you that technical support. So now I say, okay, let's look at the weekly chart, and lo and behold, in the weekly chart, today we just squeaked into, at this point, I'm going to call it a leg F. It should be F/B. Just for argument purposes right now, I'm going to put it as an F with a question mark because I need a little more evidence, because if by Wednesday this thing starts to break out, then I have no choice but to say, hey, wait a minute, this is definitely an F/B at this particular point. I'm going to go with the chance of an F for 2 reasons. One is there's a left side, right side price time match that I drew in a long time ago. Oh, that's the time. Hey, can you hold on for the next into Larry's show? Be happy to.
Great. Okay, so this is wonderful because we've got Mark in Denver. I really don't want to lose my train of thought. When I do that, I'll just forget to come back to it. I want to stay with the IYR. I'll be back, folks. Stay tuned for me. Right in the next hour doing Larry's show.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.